Now let's look at how to perform sensitivity analysis using the scenario manager. Earlier we have discussed about the data table, the one-way data table and two-way data table. There what we have witnessed that in maximum we could see the effect of change in two inputs in a particular output or outputs. So there we could see that if we had made use of the one-way data table, so we could see what is the change that it brings in the output or outputs. And under the two-way data tables, we have seen when there is a change in two variables simultaneously, what is the effect that it caused to the output. So that's what we have witnessed. But here, what we are going to explore is, it says that when it comes to the scenario manager tool, you can simultaneously change like 32 inputs. Simultaneously, you can change 32 inputs and see what is the impact that it has on your output. So that is the functionality what this scenario manager would offer. So therefore, it's a kind of extension of the data table. In the data table, you had to confine in maximum to 2 inputs, but here you can go up to changing 32 inputs. And as the term suggests, here what we'll be doing basically, we'll be using this scenario manager to try out different scenarios. So when it comes to the model development, so you may be assuming a particular state. So assuming a particular state, so you would develop your basic model. But depending on the situation of the country, so these scenarios can change. So then you can see what about the best case scenario. So if the environment is particularly supportive for the business organization, we call it's a best case scenario. Then you can see your basic model under a best case scenario. So similarly, you can see if the environment turn out to be bad, so what must be the worst case scenario? Under the worst case, what about the validity of the model that you had developed? And also, you would be having kind of most realistic one, the most likely scenario. So it is another situation that would likely to happen most of the cases. Hence, under the most likely case, what about the validity of your model? So likewise, so under different circumstances, under different scenarios, you can check the validity of your model. That is in the sense, what would be your output under different scenarios? Under the best case scenario, what is your output? Under the most likely case, what is your output? And also under the kind of worst case scenario, what is your output, or it may be outputs, right? And that's how we make use of this scenario manager. So simply putting, to test the scenarios, you'll be using the scenario manager. Again, you may have to go to this data ribbon, data tab, and in that, so you can go to what if analysis, and there you have this scenario manager, right? So just to show you, you can go to this data, and there you have this what if analysis. Under that, you can see that at the top, the scenario manager is there. Then this would be the dialog box that you will be directed to. Then you can see at the moment, the add button is active. Delete, edit, summary buttons are not active at the moment. Add button and merge button is active. So out of that, what you should select, it is going to be the add button. So upon the click of this add button, you can add different scenarios, right? Just to show that, if you click that, you can first give a name for the scenario. You can give a name for the scenario. It may be like best case scenario. Then here you can specify the changing cells. In that, you can go up to 32 inputs. That is the beauty of this scenario manager. You can go up to 32 input. The 32 input can be tested in a given scenario. So therefore, it's a huge functionality. So this is something that you cannot even imagine under a kind of manual setup. Under a manual setup, you cannot even think of. By changing 32 variables simultaneously and see what is the change that it has. So likewise, you can, by using the commas, you can use up to 32 inputs. So here also the basic model need to be developed. In that, you'll be picking these input cells, and those are called the changing cells. So having selected that, then you can simply click OK, right? Once you click OK, then you can feed the input. You can feed the input, and then you have finished adding one scenario. Then you can go to the next scenario and do the same, and likewise, depending on the number of scenarios that you have, you can add them initially, right? So that's how we do. If I go back to the lecture material, here you can see this was the window what we had made use of, and then thereafter we had clicked add, and then this is how we may feed the inputs. This is how we may feed the input. So you may select the changing cells, and then you can, once you click OK, you can feed the values to these inputs, right? Here, the most important thing is when you are getting this changing cells, make sure that you are giving names for these cells. You are giving names for these input cells. Then it would be providing a kind of meaningful context. Once you're going to feed the information, you can see that here it has selected C2 to C4, 14 has been selected. The C2 may be the year 1 sales. Then C3 would be the sales growth. C3 would be the year 1 price. So likewise, you can see that. So if you give names for the cells, especially the input cells, then those names are appearing. So earlier you have learned uh, the range name. Now it's a kind of instance that you may benefit out of that. So use the range name, especially for these changing cells. Then you'll be simply adding the different scenarios, the best case scenario, most likely scenario, and worst case scenario. You may be adding them, right? Then also you can see that you can delete, edit, different things can be tried out. So while you are adding a particular scenario, if the things had gone wrong, you can select the scenario and you can simply delete that. Or sometimes the inputs what you had feed would be wrong. So in that particular case, you can edit the things by selecting the appropriate scenario. You can go and edit them. And having done that, finally what you have to do, you have to run a scenario summary. You can run a scenario summary. So once you run that, you can see it will show under the different scenarios what is your output. What is your output? So it can be kind of one output or it can be outputs. And that's it, right? So we may work this out through an example, then it would be more convinced. Here I have given you information as to a particular investment appraisal. The investment is given, the year 1 sales, sales growth, likewise the whole lot of information are given, and you are so used to that. You are so used to this. So we've been working out models as such, but here the most important part is the scenarios. Here we had identified 3 scenarios called best case, most likely case, and worst case. Under that we identified how this sales unit can be different under different scenarios, and the annual sales growth could vary, and also the sales price growth. So accordingly, under each scenario we had identified 3 inputs. So what we are going to see, when these 3 inputs change simultaneously, what is the output? What is your output? So in this particular case, your output is going to be the NPV. Then what must be the NPV when these three inputs change simultaneously under different scenarios? So that's what you'll be looking at, right? Now let me copy this information. The input data can be taken. And also better to take the scenarios as well. Different scenarios are there. All the information has now been copied. Right, okay. Now you have all the required information for the model. The investment is there, year one sales is there. So your changing sales are these. So therefore, we can change, we can give some appropriate range names for them. Then it will help our work. Right. Now we may go and design our output. So this particular model, you've been asked to develop it for 5 years time. So starting from year 0, 1, 2, likewise you can take up to 5 years. Then you can take the investment initially. The investment has to be there. Then there must be sales. Information is there. Then operating expenses could be there. Operating expenses. Then you can pay some corporate tax based on that. Corporate tax. And there can be even tax savings on capital allowance. So we have worked the things similar to this, so therefore these are not things that is quite new to you. We had worked out plenty of questions like this. Then also there can be tax on gain or loss from disposal. Disposal of PP. There can be something as such, and thereafter you can take the net cash flow. Net cash flow can be taken, so consequently NPV can be worked out. Okay. Now for the important ones, we may give the names. Important changing sales, you can give the names. So here your changing sales is year 1 sales unit is there, one particular such input, and annual sales growth is there, sales growth is another, and also the year 1 sales price, year 1 selling price, that is also another important. So therefore it is better you may use names for them. Then once you feed the information under different scenarios, it will help you. So therefore, let me use the names for that. So you can simply go to the name box and use the easy one. Let's say sales unit. Say let me use it as let me use it as sales unit. Sales units. It has to be a meaningful one. Make sure to enter. Then sales growth is there. That is also another important piece of one. Sales growth. The third one, it's about sales price growth. Sales price growth. So sorry, this is not the input. It should be sales price growth. It's over here, no? Price growth. So let me say it's price growth. Spaces are not allowed, so therefore I have used the underscore. Make sure to enter that, right? So the important inputs, you have given the names. Even better, your output should also give a name. Say it's NPV, right? Okay. Now you have given the range name for the changing cells as well as your resulting cell, or we call it output. Now the most important task is to develop your model. So let's go and develop it. The investment, initial investment, you can see that it's a cash outflow 1 million. Then at the maturity, so at the end of the project, you would be having a kind of scrap value. It's also given, it's like 200,000. Got that information. Then the sales information would be given. It says that the year 1 sales in units 15,000. Year 1 price should also be there. So it's given, no? You can get this sales unit into price. You can even make them constant. Even in the previous cases, it's better if you can make them constant. So you can see sales is 750,000. Sales unit into sales price. Then from year 2, you can see there's a growth. You take the first or the previous year sales value, it's 1 plus the growth in sales units. Sales units growth were taken, and then you would take the growth in the price. The price growth had also been taken. Since you have given the kind of names, range name, so then it works as a constant cell. Fine. Now you can simply drag them. Then you can go to the operating expenses similarly. So it would be the cost. So you can see that you can take the sales unit multiplied by the cost. So it's a first year situation. Then in the second year onwards, you may refer to the previous year and you would take the 1 plus growth in units should be there, as well as the growth in cost. Cost growth is also given, that must be incorporated. So now you can simply drag them. Then you can work out the corporate tax by considering the operating cash flows. You can take the summation, and that is into kind of tax rate, it's 25%. Make it constant. Right. It's B9. So the tax rate applied. So make sure you make it -1 because it's outflow. Corporate tax, take it up to year 5. Then tax saving on capital allowance, you need to work out the capital allowance. So it's going to be a kind of saving. So therefore you may take the initial investment multiplied by the capital allowance 20%, make it constant, and multiply them by the tax rate 25%, make it constant. So you can see there's a benefit of 50,000 which would go up to year 5. Now we have come to the end of the project. At the end of the project, you would be selling this particular investment or the PPE for 200,000. So there you need to work out the kind of profit or loss on disposal. So in that, you can get this. You take the cost of PPE minus the cost into per annum depreciation in terms of tax depreciation, we call it capital allowance, and that is into number of years. The number of years in this project, that was like 5. So probably once you take this value, it is supposed to be 0, right? Because it is fully depreciated. Per annum it's 20%, so therefore at the end of the 5th year it is supposed to be 0. Now you have taken the carrying amount. So in fact you need to first take the disposal value. So take the disposal value 200,000 minus this. Then you can see that there's a gain of 200,000. For this particular gain, for the entire thing, multiply it by multiply it by 25%, that is the tax rate. So that's going to be a kind of tax, so therefore make it minus. So it comes as 50,000. The final year you would have to pay a kind of tax. So here you have considered all the information, and now you have worked out the basic model. So now get into the net cash flow. You can take the simple summation. So simply drag it up until the last year. So now you can apply your knowledge of NPV, the inbuilt function. Specify the rate. The rate is going to be the discount rate 12%, make it constant. The values. So remember to ignore the year 0 cash flow and subsequent ones to be taken, and then adjust the year 0 cash flow. Since it's a -1, take it with a plus mark. Say okay. Then it generate what is the net present value of this project. Under the existing conditions, what is the value? So it generates a positive value. Right? Now you have your output with you. Okay. Now we will be coming to the most important aspect. It's about the different scenarios to be attempted, right? Now you have worked out the basic model. Now let's incorporate the scenarios. Go to data, take scenario manager. Then you can add the scenarios starting from the first scenario. It's about best case, the best case scenario you are getting. Best case scenario. Under the best case scenario, what are the changing cells? You have identified them. You can simply refer to that. 15,000, that is the sales unit, I believe, comma, sales growth, comma, and price growth. Those are the 3 inputs. You have specified that and say OK. Then you can see the corresponding names of these sales has come. Now it is quite easy for you to feed the information. Existing values has come over there. You can incorporate the new situation. The year 1 sales unit is 25,000 under the best case. Annual sales growth, it's 10%. Oh yes, you can make it 10% or even it works 0.1, whatever that is convenient. Price growth is going to be 0.05. So those information had been fed into that, and you can say okay, 25,000, 10% and 5%. Say okay. The first scenario being added. Now you can go to the second scenario. We call it most likely one. Most likely scenario. Then you can see that the inputs has already been taken. So if you wish, you can make them constant. So it's better that you may make them constant. B5 is there, B6 is there, and B11 is there. So everything was made constant and say okay. Now you can insert the sales unit. Under the most likely case, it is 17,500. The growth is 7% and the price is just 2%. Say okay. Then the second scenario being added. At the third scenario, it's about the worst case. The worst case. Then similarly, you can select them and hit F4. Then you have made them constant B5, B6 and B11. Fine. Say okay. So what is that? Under the worst case, it's 8,000. It's only 2% annual sales growth and it's going to be 0.5. So carefully take that 0.005. It has to be the case now. If it is 0.5, it's going to be 5%, but this time 0.5%. Hence it's going to be 0.005, I believe, right? Okay. Now you have added everything. Now you have the three scenarios with you. Now what you want to generate, it's a kind of summary. Summary you need to take. So you can click on this summary. Then you can ask to give us the scenario summary. Then it asks what is your result cell. That is the output. So you can select one output or several outputs, but here we have only one output. I might select that. So it has already been taken. Make it constant. Then it's better. Then you can say okay. See, under different circumstances, you've been given the NPV values. These are the current values, the existing one, the best case, most likely case, and worst case. So here you can see that they have round that particular value. You can see that it's 0.5%. No? So just to check these values. Yeah, it's fine, right? Everything is perfect. See, here this is the benefit of using the names for the sales or the range names. You can see that sales unit, sales growth and price growth is appearing. So otherwise it comes as B5, B6 and B11. So it is meaningless. But here it carries a meaning, and also the result cell we have given it like NPV, otherwise it would say B26 or something. It would be meaningless. Now it is quite meaningful, and this would be the result under different circumstances. Now if you want to arrive at a kind of optimal value, you can see the probabilities of each of these cases. Say best case, there's a 40% chance. Most likely, there's 50% chance. And worst case, there's a 10% chance. Then if you keep that weight, and if you get a weighted average figure of that, it would be a kind of good representation of this NPV value. So it's something up to you to decide how do you arrive at a single NPV value considering all the cases, right? But here it shows under different scenarios what are the outcomes that it is there. So it is the basic application of scenario management.